Hi, this is Stephen Carson coming at you from St. Louis, Missouri, in these United States. Real quick show business, and then let's get right to it. First of all, thanks again to Alexander Adams, who acted as our judge for the art contest. And now I just got to get prizes sent out. So that's my next task. And then the art prizes and paying our graphic designer and all kinds of things are covered by generous donors, most of whom give $5 a month at Subscribestar. See the video description if you want to support the show, and I'd sure appreciate it. Okay, we are back after a little bit of a break with Black Horse. Hello, sir.
Good to see you. How are you doing?
Yes, doing well. Just flu. 10 of us having flu all at once. It's been quite the last week or so here.
Yeah, it's an event when it goes through a big family. So
Yep. So I am over the worst of it, but the tiredness and just sniffling just seems to drag out, and evidently this can go on for weeks. So I hope not. I'm supposed to be at the Mises Institute in a couple of weeks. I would like to feel good when I
well,
go.
spring has arrived in Canada. There's no way to not feel good. All right.
Spring in Canada, really?
Well, it's bright and sunny outside.
Okay.
I mean, never mind that it's below freezing, but it's bright and sunny.
Yeah, I was gonna say I didn't expect it to be above freezing quite yet there. Um, okay, so little bit of context. We have covered on this show certain aspects of the Russia-Ukraine war. Um, one of them being the impact on the energy supplies in Europe, because Russia was a pretty convenient. Well, Russia has a lot of natural resources, including energy resources. It's geographically quite convenient to Europe. But because of the war, they, um, well, did they jump or were they pushed? Anyway, for various reasons, energy ain't flowing from Russia to Western Europe anymore, right?
Yeah,
Um,
it's quite a. To me, it's really this. I mean, there's obviously a military story of the war. There's obviously like a geopolitical story of the war.
yeah,
Uh, but it has reshaped the economy of Europe in a fairly profound way, and it's a story that deserves to be told.
right. So that is going to be our main story. But before we get into that, you had a few smaller items you thought worth mentioning, and I'm sorry, I'm on the wrong tab. Here we go. There we go. Okay, so NVIDIA, which I know that name very well for making graphic chips and cards, that sort of thing,
Yep.
right?
Yep.
GPUs, that kind of thing.
Yes.
Um, so why are we looking at NVIDIA? And by the way, we are looking at about a 2 year horizon, something like that.
Yeah, a little less than 2 years.
A little less than years. Okay.
Yeah, so in a period of a little less than 2 years, we're looking at a
Ooh.
company that has seen a like 800% increase in valuation.
Yeah, yeah. Hard to see the vertical axis here, but the share price, it was around 150
Yep.
13 months ago, something like that, and now it's at 900. And notice that this
Yes.
is a pretty much a long-running trend, though this year seems to have been particularly exciting for Nvidia.
Yeah, no. So there's there's a gap up in June of last year, and there's
Mm-hmm.
a profound trend line, which begins, I guess, in January of this year.
Yeah.
Um,
Wow.
so uh, I chose this. This is one of the most dramatic things happening in the financial markets right now. Nvidia is not a small company, but by any stretch.
Mm.
So to see the stock move uh, at this level, um, it's not something you see every day. Um, but this is uh, I'm not sure how directly you want to put this forward, but a fairly direct consequence of the various efforts that the U.S. government has made to move chip production from Taiwan back to the mainland US.
Mm, gotcha.
So in 2022, shortly before the start of this chart, the U.S. government signed something called the CHIPS Act, where it committed something like $75 billion to invest in domestic uh, production of chips. And by invest, they mean uh, provide tax breaks and direct financial compensation to existing chip makers to put chip manufacturing infrastructure in the United States. And it turns out that when the Biden administration turns the taps on, it is possible to make a great deal of money. So, here's your free market hard at work. Um,
Yeah, so I was gonna say, yeah, David Brady in the chat says chanting USA, USA over my computer chips. Uh, um, so okay, so is this the triumph of central industrial planning or something, or is this basically
well,
um,
at this point, I'm not arguing that lots of chips are being made in the U.S. Just that it's possible to make lots of money when the U.S. government writes giant checks.
right, right. Yeah, I see. So you wouldn't talk about the long-term health of domestic chip manufacturing based on all this just yet.
Yeah, we basically have very little data at this point.
Yeah.
Um, all that we know so far is that a whole truckload of money has been spent, and we have conflicting reports about the success of efforts to onshore this set of manufacturing. But certainly, you can see from this strong evidence of a very hard financial push to reorganize the industry.
Mm. Hmm. And would this include like protectionism would be part of the Chips Act or whatever?
Well, so it's not like a tariff kind of bill. It's just
Mm.
here's a truckload of money, build stuff in designated jurisdictions.
Okay. So this is more like economic zone, special economic zone type of thing or something.
Well,
We
it's kind
want
of
to
like,
stimulate this to happen in these areas of America. We are going to put money behind it. That kind of thing.
yeah. I mean, I'm rethinking your term, your reference to tariffs, because a lot of this money comes in the form of tax exemptions. So if all the non-compliant companies pay a tax and you don't, it's kind of like a tariff.
Yeah, yeah, yeah.
So, uh,
Right.
anyways, very the technical details of the vehicle are, you know, there's a very sophisticated kind of way of dumping money on corporate America that has evolved over the last 20 or 30 years.
Mm-hmm.
Um, and the CHIPS Act is kind of the latest iteration in this long story. Usually it's green tech, but this year it's chips.
Right. Oh, and I should know more about Asia, but or the foreign policy view of Asia. Why would they want to pull out of Taiwan? Feeling
Because
vulnerable?
they view that there's some threat of invasion by China.
Got it.
There's
I see.
also a broad strategic. There's a lot of concern in the defense world about working with contractors who live inside sort of the CCP sphere of influence,
Mm-hmm.
because in the event of a war that the CCP is interested in handicapping the U.S. from engaging in, you've handed a great deal of leverage to the CCP, who has demonstrated in the last 5 years extraordinary control over even sort of non-state enterprises that operate within the CCP.
Yeah.
Um,
Yeah,
so
and I don't want to get too criminology on this show, but just to mention, Victoria Newland is retiring or whatever. Her big focus has been getting people killed in Ukraine, and in her place, a number of people have noted is someone who has a focus on getting people killed in China. So that might mean a shift in focus there. We'll see.
yeah,
Okay, you had one more Nvidia earnings.
yeah, this is just a show. This is not just a stock trend. Um, you have the stock up like 800%.
Yeah.
You have comparable trends in the earnings in 2024. So you go from a company earning, you know, between 75 cents and a dollar uh, prior to this change, earning, you know, over $5 in
What
Q4 2024.
what they're anticipating, right?
No, no, no. So, yeah, I guess that's a forward guidance. So the actual,
Oh, wait, it says actuals on the Q4 2024.
yeah, I don't
Huh?
understand that. How can you have actual
Yeah, I don't
earnings
under
in the future?
yeah, some financial year versus calendar year thing that you and I are
No,
not
no, no,
able
no,
to.
no way. Before
Yeah.
2024 hasn't happened yet.
Yeah,
So
okay.
we have
There's no
something.
way to arrange your financial year to be in the future. Yeah.
So it says fourth quarter 2024 earnings 516 per share on February 21st,
21st, 2000.
2024.
What?
Okay, it's an actual.
Okay. All right.
I have no idea why they're
I
announcing that
think you
late.
need to find out the accountants these people are using. They sound amazing.
Yeah, well,
um,
anyways, that's a lot of money. It's
yeah, yeah,
there's not a lot to this story except USG dumped a truckload of money on the chips industry in North America,
yeah.
and Nvidia is doing a good job collecting it.
What's this? It says surprise percent.
Oh,
Surprises. Oh,
so
meaning
that's
not in line with the guidance.
yeah, that's guidance versus actuals.
Guidance for okay, gotcha. I hadn't seen that before. Okay, right. So less chip manufacture. Well, what they want at least. We'll see how it goes. Is less chip manufacturing near the CCP sphere of influence, as you said, China's sphere of influence, and more firmly in the grip of the gay. Right.
Exactly.
Okay.
So
Next. On a completely different subject, what is the New York Community Bank and what happened here?
yeah, okay. So you guys may remember about this time last year there was a severe, well, there was a series of severe bank failures. Uh, most most notably Silicon Valley Bank,
Right.
but a number of others as well,
Yeah.
uh, related to losses in the deposit business. And the way the way that was prevented from becoming a broad industry crisis was the use of a Federal Reserve facility for purchasing treasuries that are purchased with deposit cash, and the intent from the Fed was to purchase these treasuries uh, basically in perpetuity the until we got out of an environment where interest rates were going up, and then restabilize the deposit business. Broadly, this program has been very successful.
Mm-hmm.
There have been no notable U.S. bank failures after the introduction of this program.
Right.
However, New York Community Bank had banks probably near failure is the best way to describe it. Is maybe the first to buck that trend. So they've got losses in the deposit business. Interestingly, they've also got a lot of losses in the lending business. New York Community Bank, as implied by the name, is a bank which operates extensively in New York State and has
Mm-hmm.
really suffered a lot from the problems in the commercial and residential real estate market in Manhattan. Um, and so it's stacked up losses. It's seen like an 80% drop in its share price. Um, and so it's gone through I think this is CEO number 3 in this calendar year.
Oh my
Uh,
goodness.
so they're in a bit of a mess down there. They got a
Yeah.
big investment from former Treasury Secretary Stephen Mnuchin. So this is a very kind of political thing.
Yeah. Right.
But they got
So the key point number one seems to imply a sequence of events here, right? They're losing deposits, and then they get this injection, $1 billion plus capital injection, led by this former Treasury Secretary. which sounds like they're basically another one of these try to keep contagion under control,
Yeah,
right?
so Stephen Mnuchin left the Treasury and founded like a hedge fund, which is called
Mm-hmm.
Liberty Strategic Capital,
Mm-hmm.
and that hedge fund has injected a bunch of money into New York Community Bank. My guess, based on the fact that it's Mnuchin, is that there's a wink and a nod behind the scenes that the bank will not be allowed to fail, and this injection of capital is meant to uh, real prevent a liquidity crisis in either the deposit or the loan business for
Mm-hmm.
for New York Community Bank. Presumably, in exchange for this, he's getting preferred shares or equity, and it's just a straight classic liquidity injection. When banks get into trouble, the capital markets is the first place that they can look to get liquidity, and this is one way to do it.
Right. Yeah, and it sends a. I mean, it's not just money. I assume it sends sort of a signal to people who were getting nervous about the shedding
Well,
of
especially
depositors.
yeah, especially with the name behind it.
Right.
Um, there's a big there will be a stabilizing effect, and it'll probably allow New York Community Bank to issue equity if they need more capital. Because
Mm-hmm.
when you get a big investor like that, the stock will often stabilize, and so if you need to issue more stock to raise more cash, you'll be in a position to do it. Or if you need to issue bonds to raise more cash, you might be in a position to do that as well.
Right. Yeah. So it's not just money. Um it's a political. They're blessing this bank politically, right, and saying, "Hey, we're going to keep this bank's okay. You can invest. You can keep
Yes.
your deposits there." Right? It's got the backing of the regime.
Yeah, very, very similar to the kind of buyouts that occurred in the aftermath of '08, which many of which were nominally private, but were, very clearly arranged.
Right. Right.
So
Yeah.
we
Okay.
mentioned this story not because New York Community Bank is particularly significant, but because this is the first failure after the implementation of the Fed facility.
Mm-hmm.
Uh, so this is, I would call this a developing story that we got to keep an eye on this show.
Got it. Yeah, and the concern, right, is contagion or whatever. I don't know. Is that the industry term?
Yeah,
Basically, that some banks start going down, and then people start having a general crisis of confidence in the banking system and want to pull their deposits out, and now more and more banks are going down, and now you've got a
well,
real
there's
industry problem.
two kind of intimately linked concerns. First, banks do a lot of business with one another, so
Mm-hmm.
there's no such thing as an independent bank failure.
Right.
Um, so that when they say contagion, that's what they mean. They mean that the commercial relationships between this bank and other banks will become in jeopardy in the event of a disorderly bankruptcy.
Mm-hmm.
The other element is, well, banks also engage in a lot of the same businesses. If New York Community Bank is having a problem, who else on the street is having a problem for the same reasons?
Mm-hmm.
And so these are two really powerful mimetic forces that tend to create general industry crises rather than individual bank runs.
Right.
So it's worth having an eye on it. We're not far enough, uh, I would say, in the industry to suggest that there's a more generalized phenomena, but it's definitely something to keep an eye on.
Okay. And then finally, before we get to Europe and deindustrialization, this is what is it? Canadian business
These are business
bankruptcies.
bankruptcies in Canada. So,
Oh, oh, whoa.
speaking of leading indicators that we might want to keep an eye on,
Yeah.
we have a parabolic trend in business bankruptcies in this country. Um,
Yeah. Now, just so people know what they're looking at, we're looking at almost 10-year, something like a 10-year on the horizontal there.
yeah,
Um,
just 10-year
and
chart.
so this is
Heading.
well above, uh, this is twice as many bankruptcies suddenly, right?
Yes. Yeah.
And
And
I'm sorry,
and they're very ugly.
this is like end of 23 and we don't have 24 yet.
Yeah, the last data we have is December 2023.
Yeah, but you know what's going on in Canada. So tell us what's going on. Is it
Well,
continuing into 24 or?
this is a very, very ugly trend, and
Yeah.
things are not better so far in 2024
Okay.
than they were in 2023.
Yeah. So
Um,
you
you
can't continue. You don't have the numbers to continue this chart, but you have a rough idea that it isn't dropping back to normal yet.
know, and w- interestingly, the this effect is showing up in business bankruptcies, but we don't yet see it in some of the other markets that you would expect to be sensitive. So
Hmm.
you don't see this. You don't see real estate defaults are in an upward trend at the moment, but there's nothing parabolic like this.
Hmm.
Personal bankruptcies again are in upward trend, but we're not in a parabolic trend like
Hmm.
this.
Yeah.
So this is in the category of know that it's happening. Um, this is a storyline that unfortunately I think we're probably going to revisit at some point in 2024.
Right. But you're kind of not, sounds like you're not quite sure what this means right now.
Yeah, I mean, what it you're looking at rates of business bankruptcy that you haven't seen in Canada since the so si- in the early 90s in Canada there was a very severe recession which had
Okay.
no comparable in the US.
Mm.
And that severe recession was linked to a currency crisis in Canada and a government spending crisis in Canada. Um, it was very, very hard on individual Canadians, especially middle class Canadians who depended on the manufacturing industry.
Hmm.
Um, and you're looking at a very similar kind of situation here where the Canadian dollar is at, you know, 15-year lows versus the US dollar. With the weakness of the oil market, there's not much to defend it. You have, you know, we're interest charges on government debt in Canada are up something like 500% over the last 2 years. So it's there's the you're looking at a difficult situation, and it's just we're early stages yet. It's something that we'll keep an eye on in this show.
Okay. Theodore Ganymede in the chat says, curious what kind of businesses are drying up. Do you have a sense of that by any chance?
Yeah, so a lot of this has to do with the fact that for the first time in maybe 20, 25 years, real estate prices in Canada are going down and not up.
Oh, they are.
Um,
Oh, all I have ever heard is that Canada real estate is just going bonkers,
well,
which was true for a long time.
it was true right up until like late summer of last year. Remember, just like in the States here, rates went from basically zero to, mortgage rates are about 5.5% here. Um,
Hmm.
and that caused that caused the beginning of a retracement in real estate prices. You're now looking at something like real estate prices that are something like 20% down. That's not enough to cause a default crisis, but
Hmm.
it's plenty to cause a lot of people who are in the home building industry and a lot of the downstream. Canada makes something like 500,000. I shouldn't say that's Canada makes a couple of 100,000 units of housing every year. And
Hmm.
if prices are going to be down 20%, you're going to see a lot of those businesses cease to exist.
Gotcha.
So that's kind of the if this trend starts to propagate, I would expect it to propagate outward from the real estate market.
Gotcha. Okay. Okay.
But
Thank you.
that's competing. We're in a very weird situation where you've got the competing forces of increased costs from interest rates and a government which is hell bent on importing the largest possible number of people from elsewhere. Um,
Yeah.
so you have like a very strange supply and demand situation in the real estate market. Uh, I
Right.
wouldn't I wouldn't even hazard a prediction as to what exactly is going to happen. Um, but it's, as I say, it's something to keep an eye on.
Yeah.
Um,
And for those who haven't followed the Canadian mass immigration story is quite remarkable relative to the current population of Canada, as I understand it. I was just seeing someone claim that, and I didn't double check these numbers, that in the last 18 months, the population of Canada has gone up 5%
Yeah,
in
that's
a
about
year and a
right.
Half.
There's
That's
been about
crazy growth.
a little bit over 2 million migrants in that time, um, in a population of 40 million. So
Right.
5% is about right. Um,
Yeah,
and
you've got to look at the relative. It's Canada's population is like one of the bigger states in the United States, but it's like getting the kind of levels of immigration that the United States is getting
yeah,
just to
that's right.
Canada, right? So it's just outsized. It's insane. And
Yeah,
I haven't really double checked to compare, but I wonder if the mass immigration story into Canada right now is the most extreme of any of,
at, at
Western Europe or
at
whatever.
present, it's the fastest rate relative to population of any country in the Western
Okay.
world,
Okay.
and
I was wondering that. It seemed like it to me. Yeah.
it's not actually that
Craziness.
close. It's something like double the rate that's going on in the UK.
Which is the
Um,
next one down. Yeah. Yeah.
yeah, the UK and Australia are another notch down. Um, so it's you would expect, like, what's happened in the Canadian real estate market up until now has reflected that story, um, and we appear to be hitting a kind of inflection point. Um, Real wages are declining, and this is real wages are officially declining. GDP per capita is officially declining. Productivity is declining. So there's a lot of very very ugly metrics for the Canadian economy right now. Um, so I just think this is a story we're going to watch unfold on this
Yeah.
show.
Yeah.
We'll
And
see how it goes.
I bear in mind the very good point you made, which is that um, the thing about Canada is that it gets really cold in the winter and
Yeah,
people are immigrating from places where they are not used to that kind of winter in a
yeah.
lot of
Well,
cases, right?
we have the largest back migration of any country as well. So not only
Right.
do the most people relative to our population come here out of the sort of G7 countries, but also the most people leave here.
Right.
Um,
Right. They go through their
so
first winter and they're like, okay, I'm done.
yeah.
Right.
Well, I mean,
Yeah.
I have a lot of these people who live near me, and it's not just that it's cold. For them, it sucks to live here because
Mm.
living in Canada, where when you don't have much money, um, and can't really afford housing, is a very unpleasant experience. A lot of these people will, quite frankly, tell you that life was better back in India, and
Hmm.
many of them go back because,
Right. Yeah.
of course.
Right. They're there until they can figure out a way to get back. Yeah.
So
So yeah, it is a crazy mass immigration story, but there is that returning, leaving again that kind of counteracts it. So we'll have to see how this comes out over the next few years.
yeah,
Um, okay, so we're going to turn to the continent. We've had a number of shows where we've focused on this. Um, it is once again, Europe is the battleground, just like when I grew up with the good old Cold War, right? Um,
yeah,
it's stuck in the middle between these two contending global powers. Um, Back then, it was the USSR and the United States plus Western Europe. Oh, I'm sorry, the USSR plus the Warsaw Pact, right? Eastern Europe
yeah,
countries under the control of the Soviet Union against the US and the Western Europe under the control of the US empire. Well, now we seem to be sort of back to that in a lot of ways, um, with the difference being that, as I remember, Black Horse, the US was quite proud of Western Germany and how it had had an economic miracle. And it was, I remember the US being a big Western Germany booster.
yeah.
I
It was
hope
a
I'm
huge
not,
propaganda thing that
yeah,
West Germany was great and East Germany was awful.
yeah, yeah, exactly. Right. Here's the same people. These people are under freedom and they're rocking and rolling, and these people are oppressed and they're miserable, right? Um, so I have to admit, it's been a little surprising to see things like, hey, Germany, stop getting reasonably priced natural gas from Russia, and also that pipeline you might be tempted to use to do it with. is gonna something's
It's
gonna
gonna
happen to it.
magically disappear. Putin did it.
Yeah. Putin did it. Yeah. So AA on Unpopular Opinions was recalling that there was a British paper that had a mock-up of Putin in a sub going down and like assaulting Nord Stream personally. Anyway, just insane. Anyway, okay. So what is going on in Germany? Let's turn to this first high-level
Yeah,
picture, which is German industrial production overall.
yeah. So we've told this story from the point of view of energy prices repeatedly, but
Yeah.
now we finally have the data to tell this story in terms of actual industrial production. So last year, when we were telling this story in terms of energy prices, we were reading kind of anecdotes about deindustrialization, and we
Yeah.
were speculating on the consequences to the German industrial economy. Uh, Now we can be done
Yeah.
speculating, and
Now here we are.
we can start to do it. So this is from the Financial Times. So they created an index of broad industrial production and energy intensive production, and there's two stories here that are worth bringing home. First of all, there's a downward trend here that has nothing to do with the Ukraine war and nothing to do with the increase in energy prices. So we've got a trend going back to 2018. And if you were to extend this out, you might see that trend on an even longer time scale. We'll talk about that later.
Hmm.
Um, but you have an acute trend, especially in what they're calling energy intensive industrial production.
Right.
Now, indexes like this are tricky. Um, you can kind of fake them. So, in order to kind of get a more visceral picture of like whether this is really an accurate claim, we pulled some of the like individual uh, hard pieces of data, and data which is measured not based on the dollar value of goods produced, but
Hmm.
based on the number of actual production units. So we
Right.
flip to the next piece here. Um,
Wait, I'm sorry. Just make sure everybody's getting this. So the pink line, so the blue line shows sort of an overall long-term downward trend. You have to kind of ignore the weird COVID moment there in 2020, right? But you sort of factor that out, and you see a not so gentle slope downward for German industrial production that has continued with the war, right? But then starting in around beginning of 2022, the energy intensive part of industrial production really has dive bombed over the
yeah,
last year to two, right? Okay, so now steel production. So this is by tons or something. Yeah, right. So not dollar value, but
thousands of tons.
yeah,
So
of
this is like
steel.
your old school, very hard, cannot be faked, simplest metric of industrial production.
Yeah.
Um, and we can see here uh, an acute problem, which appears to be accelerating in German steel production. So an acute downtrend here. This is a very long term or chart, and I chose a very
It's
long term
70 year.
chart kind of intentionally because there will be people who present the narrative that deindustrialization in Europe is either exclusively or overwhelmingly an energy story related to the breakdown of the relationship with Russia. But
Mm-hmm.
that's not correct.
Mm,
Um, you have a downtrend in German steel production going back to like 2010,
mm-hmm.
um, after what had previously been kind of a long-term uptrend.
Right.
So there's some of this which is just the green political movement, which is
Mm-hmm.
there's definitely, shall we say, American influence involved in the green energy in the green political movement in Europe. Um, but of course, this has become hyper acute since the outbreak of the Ukraine war.
Right. And so this is okay, so to tell this story in sort of three parts, there's the German economic miracle, and there we see
Yeah,
steel production climbing from 1950 post-war, climbing, getting to the uh, level that it sustains throughout like the 80s and the 90s. Um, and then that sort of steady state level, they are down, what would that be, like 25% in terms of steel production from that long-term trend. The amount that they're producing now is down. I don't know, maybe I'm probably understating it. It's going from like
Yeah,
3.6 to 2.8, whatever that is.
yeah, something like that.
Yeah.
25 to 35%, just depending
Yeah.
on what you want to see. More importantly, if you took a trend line from sort of 1983 to 2010, and you just apply a trend line, you would expect them to be somewhere in the 4,500 short tons range.
Mm-hmm.
Um, and they're not, they're like half of where that trend would have been. So
Gotcha. I see.
something fundamental changes here after probably after 2008, and we have a new direction set for the industry.
And there's a reason to focus on Germany when thinking about what's happening in Europe and I guess Western Europe. Um, because my understanding, tell me if I'm wrong, Germany has been really important industrially in on the continent for a long time. It's been really kind of the key industrial player, right?
Yeah, it has had the healthiest industrial economy in Europe really since the late 60s.
Hmm.
Um,
After
and
recovering from the war, basically. Yeah, yeah.
that's correct.
Right.
Whereas industrial production in many other parts of Europe never recovered after the war. Um,
Okay.
so, like,
Yeah,
if you look at,
so this is not it is a story preeminently about Germany, but it's not just about Germany because as we know, you have a powerhouse like Germany, and then you have a lot of other industries in other countries that are going to be connected to it and fed by it, right? So
that's right. So, Ger-
German steel is going to be used in Italian car manufacturing or whatever, right?
yeah, yeah, and in point of fact, most of the car manufacturing in Europe is completed in Germany, but
Mhm.
a lot of the parts are done in Italy and in Austria and in
Right.
other like EU bloc countries. So when we flip over to our next slide to look at auto production in Germany, what you're looking at finished product, but you're looking at a product which is intimately connected to an economic structure throughout the continent. And one of the
Right.
things I really wanted to highlight here is that um, the car industry, um, the acute problem is way less visible in the car industry, and actually the older problem, the the green problem, which kind of dates back into the mid 2000s, is far more visible in the chart. So you can see from about 2018 a real transformation, maybe a 15 or 20% hit
Hmm.
to auto production. To Again, this is measured based on units, not dollar value, so it's apples to apples. There's no inflation nonsense, none of
Right.
that. This is just how many cars were actually produced, and you can see like a really dramatic effect in the period between 2018 and 2020. Looks like we've got some stabilization, but stabilization at a much lower
Much
level.
lower level, yeah. Yeah. And this is not for those who can't see the axes, number one, this chart starts around the year 2000, but the drop from that steady state of car production throughout most of the 2000s to now is real significant in numbers. It's not exactly cutting it in half, but kind of depends on which part you look at. It's nearly halving in production. So that's quite dramatic. And as you're saying, this is predates the war.
Yeah, and what I we titled the stream "Deindustrialization Settles In," and I think that's really the story here. After 2020, there's sort of a question whether some of these trends can be reversed, kind of after a big disruption, and it turns out no. Um, you're you've got you've settled in at new lower levels of industrial production in Central Europe.
Yeah.
So if we flip to our next example, um, so we're looking at aluminum production in this case. Aluminum production is one of those really energy intensive
Mm,
ma-
hmm.
processes.
Yeah.
In order to refine aluminum from bauxite ore, requires it's done using electric arc furnaces, and it requires an enormous amount of electricity. Um, and you can see here um, the some really dramatic effects here that really drive home that this is a policy choice. So
Hmm.
I've highlighted here Russia and Eastern Europe in red, and Western and Central Europe, which is really the Netherlands for some reason has a quite a large aluminum industry.
Hmm.
Um, and so it's the Netherlands, it's really the Netherlands and Germany versus, I mean, Russia is the overwhelming producer uh, of aluminum in Eastern Europe slash Russia. So
Hmm.
that's what you're really looking at. And interestingly, you can see where the Ukraine war begins here in the chart. But um, if I didn't tell you that you were looking for the Ukraine war, you that would not be your focal point in looking at this chart, right? The decoupling between Eastern Europe and Western Europe really occurs. So you see like a big
Yeah. Yeah.
shock at the financial crisis, and Europe never really recovers from the financial crisis the way the U.S. does.
Oh,
Um,
oh, I see. I'm sorry. You're going back to 2009, where up to 2009, Russia and Western Europe are tracking. And
yep.
then after 2009, Russia
Well,
is
there's a big shock to
outproducing. Well, yeah,
there's a big
it all goes down. It all goes
there's
down.
a big
Right.
shock, and there's kind of a recorrelation that occurs eventually. But sometime in like 2018,
Hmm.
we have a decoupling between
Yeah.
uh, we have a decoupling between Western and Central Europe and Russia, uh, a decoupling which I think is pretty clearly tied to industrial policy and energy policy in the two jurisdictions.
Hmm.
And if I didn't tell you that the Ukraine war was, there in 2021, you would just think that's part of a general trend line.
Yeah. Yeah.
I mean, like, since you know it's there, you can identify where it is. But if you didn't know it was there, it's
Hmm.
not obvious.
Yeah. And in particular, going back to 2009, Russia has been out producing ever since.
Yeah,
Right. The Western Europe has never caught up.
yeah.
Whereas before they were not, kind of neck and
They
neck,
were
back and
peers.
forth. They were
Yeah,
peers.
they
Yeah.
were
Yeah.
peers.
And they're not anymore. So
So
that's interesting. But we can just buy and sell Russia's economy. It's the size of Italy, right? And all that stuff. So what does this
yeah,
mean?
something like
What does this mean, Black Horse? I feel like I'm being lied to by somebody here.
yeah.
Uh,
Well, and I also think it's worth pointing out the scale of this decline. So you have Western European aluminum production peaking out at almost 400. What is that? 1,000 tons?
1,000 metric
Yeah, thousand
tons.
metric tons.
Yeah, yeah.
And we're now down to about
220.
220.
Yeah, yeah.
So
Nearly
roughly
half.
a fif-
Yeah.
roughly a 50% drop in industrial capacity in this area. Um,
Wow.
so you're looking at a pretty profound change in the way that this industry works.
Right.
Okay, let's look at number three here. So unwrought refined copper alloys, and this is market size rather than production. So this is quite different. And the reason why you would want to look at um, copper and alloys consumption rather than production is that copper is a key element of electronic components in what I would call the manufacturing space. So if you're making
Hmm.
planes, if you're making cars, if you're making appliances, if you're making whatever the hell else that's got like low end electronic components, you're going to use a lot of copper.
Hmm.
And so copper consumption is a very, very good historical proxy for like high-end manufacturing, um, that's broadly used. So if you
Hmm.
look at the same chart for China, you'll see the point at which Chinese manufacturing pivots from like making sneakers to making industrial goods in the
Hmm.
2010s, and it's profound.
Yeah.
Equally, if we turn and look at Germany, we can see this steady decline in sort of uh, industrial manufacturing as proxied by copper usage. Um, and again, and here again, the Ukraine war is not even a blip in this long-term trend. We're just looking at like a settled in reduction in industrial capacity that's gone on for years and years and years. So um,
I mean, do you
I hope,
attribute this to the U.S.? Kind of, yeah, that's why I was bringing up about, Western Germany being something that the U.S. seemed to really be supporting back during the Cold War. Is this accident? Is this sort of, malicious,
yeah, I
pushing
mean,
pushing down of a sort of industrial competitor by the
well,
U.S.?
so let's tell the story through the kind of proximate causes, and then we can think about what it says about the geopolitical causes.
Hmm.
So there's really two broad stories here. Story number one is the green story. So you you can think of the Ukraine war as like a rapid acceleration of the green story. The green story is we're going to make energy broadly more expensive throughout Europe. Um, you can argue about what the reasons for that are, but going back to the mid 2000s, energy is much more expensive as a consequence of the green movement throughout Europe, and especially the kinds of energy that you need for industrial production. And the
Hmm.
consequence of that is that you have this chronic decline in industry on the continent, um, replaced with imports from places where energy is cheap and where it is produced in ways that would be incompatible with the European green movement. Places like
Hmm.
so, where is the steel production that is no longer in Germany? Well, it's in China, it's in India,
Yeah.
and they're quite happy to do it with traditional coal fire methods.
Yeah, and I was seeing someone commenting that if anyone was really serious, if the Greens were really serious, they wouldn't be causing industrial production to shift to countries where it's going to be done in a much more environmentally harmful way. You would want to, you know, have industrial production be done where it's going to be done with all of those concerns about the environment in place, right? Instead,
Yeah, I think I
it's all just shifted it over to places that pollute like crazy, you know?
I think it's very obvious that the green political movement in Europe is not a serious um, it's not a serious movement on its face.
Hmm.
So, for example, the Green parties in Germany never talk about sanctioning India for its use of coal fire energy or
Right.
sanctioning China for its use of coal fire industry. It's not even on the radar.
Yeah.
Uh, and if these were like serious concerns about um, environmental degradation, uh, or like the plastics people, it's the same story. So you ban like plastic straws, but something like 99% of ocean plastic pollution comes from 5 rivers in the 1040 window in Central Asia and Africa.
Right.
Um, so these are not like serious policy prescriptions designed to solve environmental problems. This is a political movement that is either completely unserious
Hmm.
or malignant and intentionally attacking industrial production in Europe. You can
Right.
kind of draw your
For
own
for
conclusions.
some other reason. Yeah.
And then the other piece of this is the EU story. right? So if you follow the Brexit story, if you follow EU politics more generally, you can see that European industry is kind of strangled by this, you know, very aggressive regulatory apparatus that essentially centrally plans the European economy
Mm-hmm.
based on sort of political considerations between the member states.
Right.
Um, and there's fighting for control of that apparatus, but it's certainly a very unhealthy apparatus for industrial production in Europe. And so when we talk about deindustrialization, these are really the two proximate causes. And then there's a more speculative uh, link to the distal causes of those two movements. Certainly, the EU, has a complicated history as both an attempt to form like a counter-American political bloc in Europe, but also a history of support from the U.S. State Department as kind of a vehicle for marginalizing national governments as a vehicle for political change in Europe.
Mm-hmm.
So that's a very complicated history, um, but certainly like the EU, the State Department sees the EU as a mechanism to prevent populist parties from in Europe from doing anything. Um,
Mm-hmm.
and certainly there are people within Europe who saw the EU as an opportunity to raise a European counter elite. Um, my view is that that project has been a total disaster, um, like
Mm-hmm.
unmitigated failure on every level.
Yep.
Um, so there's that, and then there's the question of, is the green movement in Europe um, a domestic political movement, or is it a non-domestic political movement? And I would suggest that the evidence is extremely strong that the green movement in Europe is it's like an imperial imposition, right?
Mm-hmm.
Um, you'll see it form. It's not a European. It doesn't start in Europe. It appears pretty much everywhere in the American Empire at about the same time.
Mm-hmm.
Um, so I would argue that what you're looking at there is a product of politics at the center rather than politics at the periphery.
Right.
Um, why it is that the United States, I think you might see a change in these dynamics now that the United States sees itself as in peer competition with Asian powers.
Mm-hmm.
Um, but if we're going to see that change, we're very early. So, like, as you say, during the Cold War, the United States engaged in vast subsidies of Europe in order to make the argument that powers within its sphere of influence, were better off than powers within the Soviet sphere of influence. Um,
Yeah, and I got the feeling that it was like, hey, we're all producing for the arsenal of democracy and so forth, you know?
yeah, and there's also this like implicit bribe that as long as America is delivering you lots of cheap consumer goods, then you won't become communist, right? This
Mm-hmm.
is this is kind of
Mm-hmm.
how the State Department thought of it at that time,
Yep.
and you might imagine that now that the State Department is fully in kind of Cold War 2.0 mode, that you would see the State Department take the same kind of strategy with its border allies and try to
Mm-hmm.
prop them up economically. Um,
Yeah. But that's not what we've seen so far.
we certainly haven't seen that so far. It has
Yeah.
certainly not been pleasant to be a friend of the United States on the border of this war.
Right.
Um, interestingly, if we think back to our initial story about the CHIPS Act, if you're Taiwan, who is like an American ally on the border of China, I'm sure you don't like having your largest industry, the chips manufacturing industry, intentionally moved from your country to the United States. I'm sure that's very uncomfortable for the local elites which have supported America in Taiwan. Um, Similarly, in Europe, it has not been a good decade to be a friend of the United States
Mm-hmm.
in most of Europe. So we'll see whether that policy changes. But I mean, even if the U.S. wanted to, could they re-engage in that kind of economic policy. Is the U.S. rich enough to do that? I don't know.
Hmm.
I have a certain degree of skepticism.
Okay, one more chart you had here, which is looking at steel production from the United Kingdom. And this
Yeah,
is a chart that, hey, it covers my life. I was born in 1969, so a 54
yeah,
year chart.
I wanted to raise this because when you look at charts of steel and auto production in Germany, maybe you wonder if steel and auto production is getting moved from Germany to somewhere else in Europe because of
Mm,
competitive pressures.
I see.
Maybe Brexit was really good for the UK steel industry. Well, it turns out no.
Right.
Um, the other, I mean, the UK is the other logical place in Europe to make steel. It's got huge iron and coal deposits. If you wanted to revitalize the European steel industry, you would do it either in Germany, or in the UK, or I suppose in parts of what used to be Germany that are now France. Um, None of these three places has seen a renaissance as a steel producing region.
Yeah. And in particular, this is again in thousands of tons, and it's showing that from 1969 to most recently, it's down to 1/5 of the steel production that it used to be doing when I was born.
Yep.
One fifth, 1/5. So that
Yeah.
is, well, I mean, as we've seen, right? I mean, it's like the Rust Belt in the US, right? That means there's whole uh, plants and factories and communities that used to be involved with this industry that haven't been for decades,
Yeah.
right?
Yeah, so you're looking at a profound deindustrialization. Um, Now, what you're not looking at is a zero industry policy. So there are some people who will say like nothing's made in Europe or America or whatever.
Uh-huh.
That's not accurate.
Right.
There's still real industrial production in places like Germany and to a lesser extent in the UK, but you're seeing a fraction of what it used to be
Yeah. Much
over a
smaller
larger
scale.
population.
Much
Yeah.
smaller scale. Yeah, and a much larger population. That's a good point.
So
This is not relative to population either. This is
no.
literal just how many tons they're producing. They're producing 1/5 as much with a much larger population in the UK.
Well, and for those of us who understand like basic monetary theory, I think this is one of the really underplayed discussions in the discussion of inflation. So if you look at kind of the Austrian definition, the Austrian argument about price inflation, they're going to argue that there are a couple of potential sources. Price inflation you might just print more dollars, but
Mm-hmm.
the under discussed version of inflation is you have the same number of dollars, but you have less goods. Um,
Mm-hmm.
so if you, this used to be like if you do historical analysis, this is famine economics. So what happens if you have the same number of dollars circulating in the system, but suddenly you have 40% less food?
Mm-hmm.
Um, well, the European Union is experiencing famine economics with regard to industrial goods.
Mm-hmm.
Um, and it's very weird, maybe historically unique. I don't know, but it's certainly fascinating.
Right. Okay. So there's long-term deindustrialization trend in Western Europe, I guess.
Yep.
Okay to qualify it in that way.
Yep.
Because we see a different story in sort of the Russia/Russia sphere of Eastern Europe. Um,
Well, the Eastern Europe is a much more difficult beast to talk about because you've got the big disruption at the end of the Soviet Union, and the other issue which I ran into when I was starting to look at some of these statistics is that the communists frequently failed to accurately report economic or population data. Um, and there's like 5 years at the end of the Soviet Union for which there's just no census statistics for a
mhm.
number of the countries
Yeah,
in
yeah.
question.
Just a blank
So
period.
it's very difficult to get a good handle on the kind of long term trends in
Hmm.
those countries. But certainly you're not looking at quite the same kind of thing that you're looking at in that you're looking at in these numbers.
Now, the story in the U.S. has been the story we've been told is, well, it's just been cheaper to have China and Vietnam and places like this make these things, right? And so
Yeah.
that's why there's no there's a lot less industrial production going on in the West
But
because
this
labor
story
is
is
expensive and we can just do it with the cheap labor over in the Far East, you know.
but this story is not very intelligent on its face,
Mm.
right? So if you look at your input cost to steel production, labor is not a key input cost,
Okay,
right?
right. Yeah, yeah. This is an
uh,
energy intensive, not
it's
labor
energy
intensive.
intensive, it's materials, it's transportation.
Mm-hmm.
It's not about the cost of the people who work in your steel plant. It's
Huh.
about how much does coal cost. It's about how much does it cost to ship the coal from the coal mine to wherever it is you're going to do it. It's about what are your shipping costs to deliver your very heavy finished product to wherever it's going to be used. It's the idea that this is a story about labor is just
Mm-hmm.
this
Gotcha.
is not a very intelligent reading of it. This is a story about environmental regulation almost exclusively,
Mm, gotcha.
right?
Okay. Yeah.
I had someone in my comments when I posted one of these charts on Twitter say, you know, uh, actually it was the CHIPS Act stuff, talk about like Chinese rare earth manufacturing. And I think it's very instructive because as we discussed, I guess it was 3 weeks ago, uh, rare earth metals are harvested in China, not because they're only available in China, uh,
Mm-hmm. Right.
because there's
Right.
a decision which has been made to do it there because, who cares if we kill the Chinese giant salamander as long as we, save the Pacific salmon or whatever.
So this is helpful because something that's bothered me is there's a lot of simplistic blaming of I don't know, like free trade and stuff like that, right? Hey, look what the free market did. It destroyed our industrial base and all that. Um, and I've been like, was it the free market that was it spontaneous, just doing the efficient thing that did that? And the story you're telling fits with sort of what my gut instinct was, which is it's probably is more something that, libertarians would oppose that resulted in deindustrialization. In particular, in this case, uh, sort of a certain kind of environmentalist posturing, right? Not a real concern about the environment, but
Yeah, I mean, I would certainly suggest that in the period from 1900 to 1980, you didn't have a free market in the U.S. during the heavy industrial period,
mm.
and in the period from 1980 to 2020, you also don't have a free market in the United States.
Right, right,
Um, so what we're looking at here is a set of policy choices in mixed economies.
yeah,
Um,
right,
and so I don't think deindustrialization really has anything to do with whether or not free market arguments are correct or not.
mm-hmm.
I think that's just like, in order to believe that is true, you would have to look at the economy of Ronald Reagan and say that it's a radically free market. And
Right, right, which is not,
I just don't think that's a very accurate characterization
yeah,
um, of the situation.
right, exactly. And that's part of it is to accept that Thatcher and Reagan, for example, were what they sold themselves as. They were just, hardcore free market fundamentalists, And it's funny because there's at least two groups that will push for that. One are sort of these boomer cons, right?
Yeah.
Who didn't dig really deep and didn't really pay attention to what actually happened. They just sort of paid attention to rhetoric. Um, and on the other hand, you have various elements of the left who, for their own reasons, want to portray Reagan and Thatcher as being,
Well, the most
left
extreme,
wing nightmare.
yeah, the
Right?
most extreme right wing position that you could possibly have is
Yeah.
Thatcher or Reagan.
Right.
Right?
Right. 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 So there's people on sort of both sides, so to speak, who are happy to paint this picture that does not match up with, you know, actual on the ground changes that happened under these regimes.
No, I mean, in point of fact, the EPA went through like a profound expansion between 1970 and 1990. Um, so we're not looking at a period
Mm-hmm.
where uh, you're where you've got laissez-faire towards industry. That's just not what happened. Um, you have a set of policy choices made to relocate industry within the American empire. Um, I think it's very fair to critique that set of policy choices for on their own merits, but understand them as what they are. They're not the consequences of opening up the free market. They're a
Yeah.
policy choice by the American government to relocate these industries.
Yeah. For whatever reason, which I don't really understand. But okay, we actually have two super chats, both directed at you. First, Sam153 over on Subscribestar. Thank you, Sam. Regular tipper, as they call it on Subscribestar, and a regular supporter on as well. Happy to see Black Horse back. Bad open omens for Canada. And here we go with a French name I'm going to butcher. Would Poilevre continue or slow down
Pierre
the? Say it again. What is it?
Pierre Polyev.
Pierre Polyev. Um, would he continue or slow down the crazy migrant numbers?
It's hard to read those tea leaves. He's definitely not a hardcore anti-migration advocate.
Okay.
But I suspect that you might see the number, like the annual migration number to Canada is something like 1.3, 1.4 million. I
Mm-hmm.
suspect if you got a conservative government, you might see that number tip to like, uh, 800,000, 900,000. So
Yeah.
that'd be a big decrease, but it would still be the highest by percentage migration rate in the Western world.
Yeah.
Um,
It would go down to being just the highest instead of the highest by a long shot, right?
yeah.
Yeah.
And the other thing to note is that because Canada is entering into what appears to be not a very good economic period, it has been the historic policy of the Conservative Party in Canada to promote immigration as a mechanism to goose the economy. So it might be that if he comes in facing a recession, he might think that the right thing to do is increase migration numbers to try to improve the economy. Um, so
Yeah.
it's not obvious exactly what you would get because you have he's campaigning right now on cost of living crisis, so he might
Mm-hmm.
think that he might have either opinion as to what will solve the cost of living crisis. Of course, he
Right.
won't answer. He won't even answer dishonestly at the moment. Um,
He just doesn't tell you. Um,
yes.
okay, next question. Oh boy, more French. This time his name is La Douans, something like that. He says, Black Horse, what effect does trade have on industrialization? Loaded question, but it seems to be a boogeyman on the dissident right.
Yeah. So this is what we were getting at earlier. Is very common in the dissident right to blame free trade for the deindustrialization of the United States.
Right.
I think after listening to the stream, you'll see that uh, that's probably not a fair characterization.
Mm-hmm.
Um, is probably better to view the deindustrialization of America in very much the same terms that we've laid out for the deindustrialization of Europe here as
Mm-hmm.
a policy decision
Right.
that has been made, you know, via proxy.
Straight
Um,
up straight up elite theory is what you need here, is what you're saying.
that would be my suggestion.
Yeah,
Uh,
yeah.
that with that knowledge in your back pocket, um, trade has a complicated relationship to industrialization because um, there are actors in the market, for example, China, which will very aggressively subsidize um, industries in an attempt to deindustrialize countries it views as geopolitical opponents. And it
Mm-hmm.
will do
Mm-hmm.
this with the intent of limiting their military production because, you know, that's their historical doctrine as to what determines the military capacity of a competitor has to do with its, production in hard goods. Um, so in a circumstance where you're proposing trade with a subsidizing opponent, um, you're going to have problems competing fairly with them. Equally, if you have trade crossing borders where environmental regulations are radically different,
Yeah.
like what you have going on in India, for example, today. Um, if you're serious about those environmental regulations, you would want to restrict trade in order to coerce production of goods inside a jurisdiction where they're produced according to certain environmental standards. Um, so it's the relationship between trade and industrialization is kind of a complicated one because it touches all these kind of military and broad policy areas.
Hmm.
Um, but certainly regional specialization is a big factor, especially in heavy industry. So we talked about this when we talked about the steel industry, but the input costs for steel are dominated by the transport costs to deliver iron, coal, and finished product steel to market. And so there are huge regional advantages to doing that in specific locations. Um, and there's definitely an advantage to the consumer, whoever that consumer might be, to centralizing production of steel and other certain other hard heavy goods um, in those locations.
Um, More comments. Okay, well, one I just wanted to pick out that I liked. Rave Master J says, "When the world deindustrializes, the man with a lathe is king." That was funny. Um, anyway, and Caleb sends in a super chat, says the Bushes ensured U.S. investment in China went exclusively to corporations they had some stake in, at least in the beginning in the 1970s. That is an interesting comment because if you've been watching this uh, Mike Benz Cyber, BENZ Cyber on Twitter, and he's been all over the place on being interviewed and stuff. He talks about, in the case of the Ukraine, how the Biden family had certain investments they were trying to make, and how all of this ended up having something to do with that. I haven't followed the whole story yet, but it does seem to be that um, we
Well,
have
I think,
families that will use the political process to enrich themselves.
yeah, and I think it's kind of uncontroversial history at this point that the U.S. State Department broadly believed that they would be able to make China into another one of these countries which are very effectively politically controlled, where uh, U.S. investors are able to kind of envelope the politics and do their manufacturing in peace. Um, a good example of this is a country like Vietnam or uh, Indonesia, where there are local politics, but the local politics never interfere with the investments, with American
Hmm.
investment and American profit taking. And
Hmm.
it's very obvious that in the period between 1990 and 2010, the assumption would be that was that the sort of the politics of China would melt away and it would just become one of these kind of uh, banana republics, like a lot of banana republics in the original sense of that word,
Hmm.
where
Hmm.
U.S. investment interests dominate the politics, the local
Right.
politics. Um,
Yeah.
and that did not that very definitively did not happen. The CCP was very aggressive, very assertive,
Yeah.
and not particularly respectful of customs of investment or any concept of rule of law in its treatment of foreign investors, um, and has, as a result, um, not become a jurisdiction dominated by politically dominated by foreign manufacturing industries interests.
Right. Yeah, they have uh, very consciously resisted that kind of domination. Um, they talk about
Yeah,
it
and
sometimes
uh,
as like having the state be over the market or something, but It's
Yeah,
it's
and you
it's
can look at
it's
this
almost
from
more like just the Chinese state wants to be in charge of China as opposed to letting the U.S. state effectively be in charge of China, right?
that's exactly right. You can look at
Yeah.
this from multiple levels. On the one hand, it's led to kind of insane industrial policy within China. On the
Hmm.
other hand, China is not a U.S. vassal state,
Right.
whereas a lot of the other countries that kind of opened up to U.S. investment ended up as American vassal states as a result.
Yeah, and
So
I guess the shocker for me, as we've been discussing, like Germany, is that instead of like at one time you could have said, "Hey, that was a pretty good deal for Germany,"
yeah,
working
yeah.
with the U.S. in the Cold War. Now the deal doesn't look so great for Germans, right?
Yes, and you can certainly see why the U.S. empire is kind of fraying at the edges. Because if you
Hmm.
imagine the incentives of the people in these countries, um, you know, as a Canadian, I used to think it was a really great deal to be a U.S. vassal state. Um,
Hmm.
I don't think that anymore.
Yeah,
So,
right.
um,
Exactly. Yeah. We're talking about sort of the economic reasons, but then there's cultural impacts as well that are
yeah,
people are not enjoying. Okay, final thing I wanted to share from Overseer 700. He says another thing with things like aluminum production, etc., they are high constant energy consumers. You have to keep the process going to keep it economic. Interruptions in input or process are a no-no. They usually put aluminum production near dams so they can have constant energy input. Many of the
yeah,
Greens hate dams.
yeah,
So,
yeah,
yeah. So
yeah.
anyway,
I mean, the Greens hate like all forms of stable energy production. It's kind of wild. Like
ah,
no nuclear, no hydroelectric.
right, right, right.
There's no winning.
When the sun is out, then maybe you get your energy, maybe, right?
Yeah. Well,
That kind of thing. Okay, thanks. Some great comments today. And I think we are ready to wrap it up. Um, yeah, and let's see if I can commit to this. Like I said, my family's been having the flu, so it's been a little hard to get my mind, do anything but just keep going with my job. But I am hoping to start next week on a little series on science in the Middle Ages. Um, a lot of misinformation about, the church burning scientists or something. I don't know. And so I'd like to set the record straight. There's a great book that was recommended by Ed Fazer, and I think it's a topic that is close to my heart, is sort of resurrecting our understanding of our own history in the European Middle Ages, Christendom, I like to call it, whatever, however you want to think about it, but that period from about 500 to 1500, which really was what gave us what we think of as modern European civilization, right? But we've been lied to a lot about it, so I'd like to correct some of the record on that. So hoping to start that series next Thursday, and then 2 weeks from today, hopefully we'll have Black Horse back with us. Actually, let me be careful. At some point, I'm going to be at the Mises Institute. That might, in fact, be 2 weeks from now. Give me just a sec. Doing this live. Look at my calendar. Oh, I'm sorry. Yeah, 2 weeks from now, I'll be at the Mises Institute. So no show March 21st. Black Horse.
yeah.
All
Well,
right.
I will be back here at some point, and we'll talk more economics. So.
All right. Okay. Thank you, everyone. Talk to you next week.